Hey, hi everybody. Welcome back. Good to be here. Ed Ponsi here, your FX educator. You're on behalf of FX Street once again. And it is, what is it? Tuesday, the 22nd, 23rd, sorry. Tuesday the 23rd? Do I even know what day it is? This is a good question. You know, it's been such a crazy time. Yes, it's Tuesday the 23rd. It's been such a crazy time lately. Lots of traveling. I've been all over the U.S. Recently. And the days keep changing, the time zones keep changing, but the Forex market is always there. So let's take a look. If you do have any questions, please feel free to jump in at any point, and I'm happy to give you an answer if I can. Ron J says, hey, hi from 30,000 feet on Delta Airlines. Hello, Ron, up in the sky. Look up in the sky. It's a bird. It's a plane. It's Ron J. Up 30,000 feet on Delta. All right, Ron, fantastic. Be sure to get everyone on board to start trading Forex. By the way, interesting scenario that happened lately. I don't know if you're aware of this. And this is more of an FX, like more of like, I would say the business of FX, right? We usually talk about charting and trading and all that stuff. But interesting thing is that the CFTC has charged FXCM with undercapitalization related to the 2015 shortfall from the whole scenario with the Euro-Swiss franc crash. And I'll pull it up for you, and you can here you can see it. Euro-Swiss crashed badly in early 2015. There it is. Now, we all know at that point that FXCM had to borrow some money, and they had to borrow money because there was, you have to maintain that 20 million segregated in your account. We all know that they fell below that 20 million, and that's why they borrowed money the next day. We all know this. So why is the CFTC now filing an action against them because of that? The CFTC was well aware of it at the time. And I'm reading Forex Magnates here. I'm sorry, no, I'm reading Leap Rate. It says they describe it as a very bizarre filing. This is harassment, folks. They're harassing FXCM. The CFTC has done whatever they can to try to injure Forex business in the United States. This is more of the wonders of big government, right? They've driven companies like ACM, FXDD, and half a dozen other companies out of the U.S., and the ones that are remaining are being harassed. This would be similar to, it's very bizarre because the CFTC was right there at FXCM's offices the very next day, making sure that they borrowed the money to bring their capitalization up to par. And now, a year and a half later, the CFTC is charging FXCM with undercapitalization based on this particular event. By the way, if you want to know about is FXCM undercapitalized now? No. There's no accusation of that. This is all related to 2015. By the way, do you want to know how to find out if your broker is undercapitalized? Right? I will show you how. I understand margin requirements are changing in the USA. I'm not sure if that's true or not, Fred. You're not the first person who's mentioned that to me, but I haven't heard anything concrete. Euro-Swiss still leaves a bad taste in my mouth from 2 years ago. Yeah, absolutely, and I don't blame you, but that's really the Swiss National Bank's fault, in my opinion. But if I'm going to pull up, watch this. Pan on Fire is excited. He knows he's going to get something interesting here that he's probably not going to get anywhere else, right? I'm going to go now this is just for the U.S. CFTC broker list. I'm typing it in to Google. And the first thing that comes up is, now this is the CFTC. This is from the CFTC itself. They have the capitalization figures as of the end of June. It's good to know how much money your broker has, correct? Now, this may look a little bit daunting, but there's only a couple of columns that we're really concerned about. I'm going to try to move these little guys around here so I can see a little better. Okay. All right. So let's take a look. We can see our brokers on here and how well capitalized they actually are. Let me just try this one more time to make it a little more. Yeah, there we go. Now we've got it the way we want it. Okay. Perfect. There are only 3 columns here that matter. Net capital requirement. That's how much money the CFTC requires your broker to have. Excess net capital is the amount above and beyond that the company has. And adjusted net capital is simply these 2 columns added together. Now, if I go down to FXCM, Forex Capital Markets is the official name of FXCM. FXCM is required to have $34 million separate from client accounts. Now you're saying, Ed, that's more than 20 million. Correct. Because if it's if a company is doing a lot of business or if they have a lot of client assets under their control, the number goes higher. So for FXCM, the number is 34 million. They must keep 34 million separate from client funds. Not only does FXCM have it, they have 18 million above and beyond that for a total of $53 million. So there is no accusation that there's any problem at FXCM right now. All of this nonsense really relates to what happened in 2015, in January of 2015. How crazy is that? Gain Capital, another Forex broker, right? Gain Capital is required to have 27 million. So what do I already know? I know that Gain Capital either is doing less business than FXCM or has less assets under management or both. How do I know this? Because the requirement of 27 million is lower than FXCM's requirement of 34 million. Anyway, does Gain Capital have the 27 million? Yes, they do. In fact, they have an additional 14 million. They have an additional 14 million above and beyond that. So add the 14 and the 27 and the extra, and you get 42 million. Gain Capital has 42 million. So these companies are well capitalized. I'll take a look at one more, Oanda. Right, Oanda, right, is the biggest. And a lot of people don't know this because Oanda is kind of quiet, like they don't advertise as much as some of the others. But Oanda's requirement is 47 million, and that means they must be bigger than Gain and FXCM. Does Oanda have the 47 million? Yes, they do, plus an additional 45 million for a total of 93 million. Oanda, by the way, recently purchased the accounts of TradeStation. TradeStation is no longer involved in Forex, and TradeStation is just doing stocks, futures, and options, but no longer Forex. Oanda recently obtained those accounts. Required to have 20 million at all time, Abdul. At least 20 million, but the requirement can be higher. Is Oanda in Canada? You know, I believe Oanda is based in New York City, but they may be doing business in Canada. I honestly don't know. I know FXCM does business in Canada, but I would imagine that Oanda does as well. But I don't believe Oanda is based there. Anyway, these are examples of companies that are very well capitalized. Now, why is the capitalization requirement so high? Does the CFTC give futures brokers, do they put them through as much stuff as they put the Forex brokers through? Take a look at this one. This is going to be TradeStation. TradeStation is actually an excellent company. I use their charts all the time. But TradeStation's requirement, now that they no longer have Forex, is 3.6 million. Now wait a minute. You're telling me that Forex brokers have to have 20 million at least set aside. But futures brokers can have a lot less money set aside. That's exactly what I'm saying. Who created this rule that Forex brokers should have it so much tougher than futures brokers? It's the same people who created the rule in the U.S. that FXCM cannot offer gold trading, oil trading, stock futures trading, right? That's not allowed in the U.S., but if you trade FXCM in the U.K. or elsewhere or Canada, you can trade S&P futures and gold and oil. So all of these rules were written into law by the lobbyists of the futures brokers. They made it. They basically saw FXCM and these other Forex brokers as competition, and they decided to kill the competition with laws, with regulation. Okay, so TradeStation, despite being a huge company, only has a requirement of 3.6 million. Obviously, they have way above that for a total of 67 million. But isn't it funny that TradeStation is only required to have 3.6 million? The least amount that a Forex broker would be required to have is 20 million. Makes you go, right? Okay, are margin requirements very different? Do you mean from country to country? I would believe so. The U.S., the maximum margin requirement is 50 to 1. The maximum margin allowable is 50 to 1. And I think that's on majors. And on crosses, I think it's only 20 to 1. But all that does is it reduces your buying power. And I think there's still sufficient buying power to make money in Forex at 50 to 1. I don't see it as a problem. Futures and Forex. Are you referring to this one here, Ameritrade futures and Forex? I guess because Forex is in there, the requirement is above 20 million. But it's only 21 million. I mean, the future side of it is a very low, figure. And the Forex side is a very high requirement. That requirement figure is very high for Forex, very low for futures. And so now you know who put all these tough rules on the Forex brokers. It was the futures industry. They lobbied. In other words, they paid money. They bought politicians. They got influence. And they were able to create laws that made things really tough on the Forex brokers. A good number of Forex brokers then quit the U.S., like ACM and FXDD, quit the U.S. completely. And others remain, but have consolidated there's been dramatic consolidation in the industry. So now you know. Isn't that cool? So isn't it great to be able to look at, because of this, here's the cool thing. This comes out every month. So if I'm using a particular broker in the U.S., not only can I look at this month, I can look at the previous months, and I can see if their capitalization is rising or falling. Think of it this way. I could draw a chart based on how much money my broker has. If the number is going up, that's probably good. If the number is going down, that might not be good. In addition to charting the amount of money they have, you could also chart the amount of money they are required to have. In other words, is the requirement rising? If the requirement is rising, that's probably a good thing because it means the company is doing more business. If the requirement is falling, that's probably a bad thing, okay, or it could be a bad thing. Anyway, now you know, and you'll never be in a position again, right? At least if you're in the U.S., anytime you're going to write a check to a broker, whether it's futures or Forex, check this list, right? And make sure that you're writing a check to someone who is well capitalized. Sometimes you see these companies that are just skating by, not Forex, but futures companies that have a very low requirement, right? And check this out. Like somebody here, I don't know what type of company this is, but this is AMP Global Clearing. Their requirement is 1.5 million. Okay, their requirement is 1.5 million, and they have 909,000 above that for a total of 2.4 million. Now, I'm not going to name any names, but I'm willing to bet there are people in this room who are worth more than AMP Global Clearing, right? If AMP Global Clearing only has 2.4 million, and it's not a brokerage per se, it's a clearing house, but still, would you ever write a check to a broker who has only $2.4 million? That's peanuts for a broker, right? So you would say, going to cross you off the list, no matter how interesting, your pitch may appear. I'm not going to write a check to a broker that only has a couple of $1 million to its name. Interesting, right? So now you know. Good to know, right? All right. Just a little something extra for you there. Let's take a look at the data that's coming out here. And we're seeing we're just a little bit away from manufacturing PMI in 20 minutes in the U.S. Market manufacturing PMI looking for 52.7%. And then in 40 minutes, we're going to get new home sales. Right? New home sales to me are not as important as existing home sales. And that's because 85% of the market consists of existing homes. Most people can't afford to buy a brand new, newly constructed house. That tends to be kind of expensive. So the majority of the activity takes place with existing home sales, and that's what we always have our eye on. Okay, so we've got manufacturing PMI in 24 minutes, new home sales in 39 minutes, Richmond Fed Manufacturing Index. That's like the Philly Fed, only it's less widely followed. They don't even have an estimate for the Richmond Fed. All right, and that's coming up in 39 minutes. European Consumer Confidence also in 39 minutes. Very interesting stuff. Okay, and that's pretty much it for today. If you're trading Canadian dollar, you'll probably keep an eye on this one, the API weekly crude oil stock. In other words, how much crude oil have inventories risen or fallen. We get the API number on Tuesdays, and we get a different number on Wednesdays. EIA, Energy Information Administration, comes out on Wednesday mornings. So if you're following oil or Canadian dollar, you definitely want to pay attention to that one. Bunch of stuff coming out on New Zealand tonight, which is as interesting if you're trading New Zealand dollar. Okay, and that's pretty much it. That's pretty much it. Okay, all right, let's get to the charts. Fascinating, right? Okay, if you do have any questions, please let me know, and I'm more than happy to try to answer those questions for you. We were talking about ATR earlier, by the way, and how ATR was dropping across the board on these currency pairs. I want you to know that this is not just happening in the currency market. If you look at the S&P 500 and you look at how small the candles have gotten recently, lots of tiny little bodies up here on the S&P 500. And if I add ATR to this mix, what are you going to see? Plunging ATR, only 10 points a day on the S&P 500. And that's the lowest that we've seen in quite a while, maybe since 2014, the lowest that the volatility has been. There has been, look how quiet, look how tiny these candles have become. Just incredible, tiny little dojis all over the place. These dojis are not reversal candles. It's really important to understand this, okay? The dojis are not reversal candles. They represent indecision. Indecision and reversal are two different things, okay? Indecision and reversal are two different things. The other thing I want to point out is that all candles lose their meaning in a sideways market such as the one that you're seeing here. All of these, in other words, this hammer means nothing located in a sideways drifting market. The hammer has no meaning. Why is that? Well, it's just like they say with real estate. It's all about location, 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 right? That hammer is only important in a downtrend, and we are clearly not in a downtrend here. In an uptrend, you would call that a hanging man pattern. Hanging man pattern, and again, this is not something that that I would use because it's all about location. It's all about, if you understand technical analysis, it's all about location. The location of these candles causes them to be meaningless. We're just drifting sideways. You know, we don't have a direction, so we can't reverse direction if we have no real true direction. We are simply drifting at this point. Okay. So not just currencies, but stocks, also volatility falling. What about oil? We got questions coming in on oil, and I'm going to pull that up next. The volatility on oil might be a little bit different, right? It's not hitting a absolute low, but you can see that it's been dropping overall over time. But yeah, these candles aren't tiny, and we are seeing a pullback. That was a pretty amazing run, really, from 40 up to almost 50. That's like a 25%, almost a 25% run. And you know, but it's pulling back now. The question is it going to 40? It could certainly go back to 40. I think oil is sort of trying to find itself here. But one of the things you'll notice, despite all the ups and downs, the overall range is getting tighter. Let me demonstrate. Right? I see a major higher low, and I see a major lower high. It could go back down to 40, but the more likely scenario is that we just stay in here. In other words, we've been ripping back and forth for a long time on oil, right? And now those movements are still there, but I think they're going to become less and less. Oil's going to calm down a little bit, right? Oil needs to calm down a little bit, and these waves of volatility, right, are starting to go away, right? And you're seeing the volatility is actually fairly low right now, but it's not rock bottom the way it is on the stock market and on the currency market. Gold just formed a doji reversal, but next 4 hours went up. Yeah, I mean, right, because you can't place any confidence in these reversal candles or in a sideways drifting market. And look at the daily here on gold. And by the way, the gold's volatility has also dropped. See how gold spiked on the Brexit? But what's been happening since? Gold is dropping, dropping, dropping in volatility, now only moving about $16 a day. But just like the stock market, looks very similar, doesn't it? Lots of tiny little candles signifying nothing, really. We're adrift. We're adrift. So what this demonstrates also is the way that all of these markets are tied together. And this is something that I think you understand it. The longer you've been in this, the longer you've been in trading, you begin to see how everything is tied together. Volatility is dropping on not everything, but nearly everything. Volatility is falling. Whether it's gold or stocks or currencies, volatility is way down. Where are we right now on the calendar? We're in late August. And I think a lot of people are on vacation right now. I think a lot of people are on vacation right now that were not on vacation for Brexit and the aftermath of Brexit. I think most of the big traders wanted to be there on the desk because none of us had ever experienced anything like it before. And there you see the big spike in gold on Brexit, right? But none of us had ever experienced anything like it before. But look at the candles getting smaller and smaller, even compared to here. The candles are much smaller. So what happens on a trading desk is something like this. The senior trader says, okay, I'm going on vacation for a few weeks with my family. and he's speaking to the junior traders now, you're in charge while I'm gone. Don't do anything crazy. Just keep the desk open. Place the trades that for orders that come in. If orders are coming in, place those trades. But you are not to make any decisions on your own. You are not to do anything. I do not want my phone to ring while I'm on vacation. I don't want to hear any dramatic events occurring. You're not to try to initiate any new positions or make any major decisions while I'm gone. And that's why you're seeing this drift. You basically have caretakers in charge of the trading desks right now. This will probably be true for another, I would say at least for another 10 days or so, maybe 2 weeks. Pardon me, the Labor Day weekend is 2 weeks away in the U.S. It's 2 weeks away from yesterday, actually. So, yeah, they should just go to the pub. Exactly. Well, I think they have pretty much, right? They've just on autopilot. In other words, we're just on autopilot right now, and that's the way it stands. Okay. Absolutely. Absolutely. Pan on Fire has that right. Okay, so by the way, there's 2 windows open here, chat and Q&A. I get some comments in the chat and some in the Q&A, so I always open them both. You might want to do that too, just so that you make sure you're seeing all the comments, right? So what you would do is, how do you handle this market? Don't assume any big moves are going to occur. If you're going to trade and assume that smaller moves will occur. That means your targets need to be closer and your stops need to be closer because you still want to maintain a good reward to risk ratio, right? So if your targets are going to be closer, then your stops have to be closer as well. Make sense? Okay, because this is an environment where people can get hurt, and we certainly don't want to see that happen to any of our friends. So you need to defend yourself first and foremost. Okay? All right. And just a few more notes going forward. I won't be here with you tomorrow. I just want to check tomorrow's upcoming data. Probably the big one for tomorrow is German GDP. German GDP expected to rise by 3.1%. GDP expected to rise by 3.1% in Germany. That's coming up early tomorrow, 6 GMT. And that's going to be probably the biggest market mover on your docket for tomorrow. I see what you mean about pound US dollar, says Pan on Fire. Yeah, it is starting to creep, isn't it? I mean, it's trying to get to 132, right? But it's so quiet. It's so darn quiet out there. And looking at this sort of rectangle, this is sort of the base that's forming. I don't know if it's going to break out to the upside or the downside, but if it can get above 134, I think that's tremendously bullish. Just a lot of people are short British pound right now. We looked at the COT reports yesterday, and if you missed it, please do check the archives. COT report says that the market is overwhelmingly bearish on British pound. And who can blame them? Because that's all they've heard is fear-mongering and negative comments from brokers. But quietly, those brokers are upgrading their estimates for GDP for 2016, and quietly the economic data is coming out better and better in the UK, so can't be denied, right? So anyway, 200 more points or so, if it can break out, this could be a screaming buy. We'll take a look. We'll keep an eye on it. All right, everybody, so thank you for your listening and thank you for your attention. I really appreciate it. Couple of fun days on here. We covered a lot of topics, and I'll be back again on Thursday, and we'll discuss things further. So everybody have a wonderful day. I'll see you back here on Thursday. Take care.